Welcome back to the Dividend Diplomats YouTube channel. You've got B, the man, the legend, the Columbus, the Mr. Ohio State, the Buckeye, Bert over there. And you know you're rolling with Lanny, the Dividend Diplomats guys. And we're going to take a rewind, a little flashback to last week because we're going to talk about our stock purchases and the capital that we put out there, adding to our passive income stream and showing you what stocks we're buying right now.
And everybody in the last week, you're going to find out by the end of this video, did we invest over $3,000 of capital in the last week? That's what we're going to tell you about. We've been trending around 2,000, 2,500, but we were bumping up against 3,000. So let's see if we cross that threshold, everybody. But before we start talking about these purchases, you better smash the heck out of that subscribe button. Give this video a thumbs up. Let's get hyped up, everybody. Let's go. Landy's feeling better. We're ready to talk about some dividend stock purchases. Woo!
Whoa, man, Bert's flaring out over there. He's high dealing, wheeling dealing, girls stealing, high flying. I'm wilding out. He's spilled more liquor in 1 year. No,
Oh, Dad, I can't think of malt liquor right now. That's too close to that natty daddy. That's still haunting me.
No, but guys, hey, we're still buying stocks right now. I know it's pretty interesting right now in the market. We're filming this here December 13th. News came out about CPI earlier, at 7.1% inflation. That was still high, still higher than prior year. So, the market popped favorably, but then settled down nicely because there shouldn't be too much overreaction right now because, guys, the Fed has raised rates already 375 basis points this year. So you hope that some of those earlier increases are finally trickling their way into the economy and suppressing some of the pricing. Mm-hmm. But wage growth is hot. So there's also that there's a lot of other things and headwinds that are going to keep inflation high right now. So guys, interest rates will continue to rise for at least the next 5 to 7 months. What do you think, Bert?
Yeah, no, I agree. It's hard to predict how long it's going to happen until more data continues to come out. I think January is going to be very telling as companies continue to release earnings and we start to continue to see the impact of inflation on companies' financials. We'll see how things are, how are more of the jobs reports, how are wage reports, all that stuff. We need more data. And I think that's the key. The market, before you can say it's going to cool off, rates are going to start coming down significantly. You have to show that there is a sustained cooling of inflation, I should say, not just 1 month, not just 2 months, but you see a trend where it's coming downward for the long haul.
But even though the markets are rocky right now, popping back up over 4,000 now in the S&P 500, we're consistently putting money to work. We're still buying assets that grow dividend income streams here. And man, we put out a lot of capital during that last week, that ended December 9th, that first full week of December. A lot of these were on our dividend stocks to buy this month. Mm-hmm. Check out all our previous videos because we buy what we say in our videos. And we're trying to show you that proof is in the pudding, trying to be fully transparent. Obviously, do your own research. But Bert, we got a lot to cover here, don't we?
Yeah, so let's jump right in. I can kick this off this week, Lanny. As everyone knows, we hit our 100 shares each of Johnson & Johnson last month. So we've been buying other stocks in our portfolio that we're not committing to one. We're just going to find some undervalued stocks over the weekend, sprinkle in some shares here or there. So that's where this first round of purchases are going to talk about. Not all of our Monday purchases, but some of them. That first stock we bought, Qualcomm, ticker symbol QCOM. We talked about how we put our money where our mouth is. This is one that's been hot on my watch list over the last month or so. I continue to add Qualcomm in the low 120s. We bought on Monday 123.50, adding $3 of income at a yield of 2.43%. But then we came back on December 8th and added another share at 121.35, adding $3 more. So in total, 2 shares of Qualcomm, $245-ish when it's rounded up there, adding $6 of dividend income. So that was our nice one. And then you know what? On that Monday, another stock we've been talking about, another stock that's been on our watch list, another one that has been controversial to say the least, Intel, ticker symbol INTC. Talked about how we like Intel. We're yielding at 5%. So on that Monday, grab 2 shares at $28.44, $57 were thrown in there, adding $2.92 of income. The yield on that purchase was 5.13%. It's a big day for the chip sector. So that's how I kind of started things out here. Not going to complain. But Lanny, you tell us about your standard purchases now.
All right, guys. My wife and I still staying consistent, albeit now down from 3 to 2 shares of Vanguard's high dividend yield ETF, ticker symbol VYM. Still waiting on that Q4 dividend, by the way. But we ended up buying, 4 shares total, 2 each at $112.43, adding $6.44 each, or just under $13 at a yield of about 2.86%. And then you guys already know I'm buying $60 a day of S&P 500 Vanguard's ETF VOO. Put out $300, added 0.8214 shares, and added $4.56 at a yield of 1.52%. So in total, right there, about $750-ish.
Love it. And if you recall, everybody, Lanny used to be buying 3 shares of VYM. Now it's down to 2. So let's just put this one back because I'm going to talk about my purchases. But remember, Lanny took that extra share, put it to work elsewhere. I'm excited to see where you put that to work, Lanny. But I'm going to talk about one of our purchases this week. And this one, it was kind of a surprise purchase. I don't want to say this was an impulse purchase, but it was one where it was a Friday. And I'm like, you know what? F it. That was pretty much what it was. I was jealous that Lanny was buying the stock and I hadn't done it. And it's a dividend aristocrat that's on the verge of becoming a dividend king. We know I don't like to buy new positions right now. I just couldn't resist this one. I started a new position in our company. And Lanny, I am pumped up that I'm now a fellow shareholder with you and so many other shareholders out there in the dividend growth investing community because we bought Medtronic, ticker symbol MDT, for my wife's portfolio. 10 shares at $78.05. We added $780.53. And then that brought him $27.20 of forward dividend income and a yield of 3.48%. I love it. I was so pumped up about this.
Solid investment. And I hope you're not done there, right?
No, I'm not. And one of the cool things about Medtronic is I want to make sure I'm getting this right. So I'm just pulling this up quickly here. Ex-dividend date, December 20th. So I'm probably going to continue adding in here a few more times before the X date. And it's going to pay a dividend in January. So we're going to be building up our income in that off month. So that's what's exciting. It doesn't mean everything, but it's always nice when you can add dividends to a great dividend aristocrat in a company that pays in the first quarter to help spread out income.
Bert's about to tear up after that purchase, man. He's like, it's my quarterback.
It's my quarterback.
Oh man, well, Bert, toss the ball back to me. We're going to talk about 3 stocks, that we also bought, obviously using most of the, leftover money from what we used to buy in Vanguard's VYM. Hate it or love it. I bought 4 more shares of Intel at an average price of $29.17, added $5.84 in dividend income at a yield of about 5.01%. And then with my wife, as we all know from the other videos, we did buy 1 share again of Medtronic, ticker symbol MDT, $79.04, added $2.72 in forward dividends at a yield of 3.44%. But we weren't done in her portfolio because, again, we were doing, remember, it was $100, $110 per share for VYM. So with MDT only being around $78, $79, that still left, $20 to $30 to, $40 left, depending on which way you want to slice and dice it. So we ended up buying 2 shares of BRT Apartment Corp, ticker symbol BRT, at $20.31, added $2 in forward dividend income at a yield of $4, or at a yield of 4.92%.
Marvelous, Lanny. Absolutely marvelous. I love it. Obviously, I'm clearly on board with the Medtronic purchase, and then the BRT, that Bert REIT, gotta love it.
So terrible.
It is. I gotta get my dad jokes in here, everybody. So hang tight with me. So let me end my purchases. There were 2 more stocks that we bought. We've been buying a lot of these stocks. Let's start first with the smaller one of the purchase. It was a company we just featured on our YouTube channel the other day. Good old Stanley Black & Decker, ticker symbol SWD. Okay. Yeah, just watch the video to see what we're talking about with Stanley Black and Decker. It's been beaten down 50%, yield 4%. So I figured I'd grab 2 more shares at 77.94, adding 155 and $6.40 of dividend income, just to help lower that cost basis a little bit.
The dog has been beaten, but the dog's heart is still going.
Yeah, one second. And the heart's just going to keep on thumping. And that's really the point here. We'll see how much more we keep adding the Stanley Black and Decker over the few weeks. But again, don't need to keep talking about Stanley Black and Decker because we just featured a video on it. So again, keep going back to that video. It's linked somewhere around there. You can find it. Last but not least, another company we've been talking about, Citibank. That was our last Monday purchase for my wife. Ticker symbol C. Grabbed 4 shares at 45.04, adding 180.18. That was more than what we were putting in with Johnson & Johnson by probably about $10 at the end of it. This added $8.16 their income at a yield of 4.53%. So Citibank, we've been just building up her position in this too big to fail financial institution.
Really going for that yield.
Yes. Yeah, we are not messing around to end the year. I mean, yeah, if you look at it, let's just walk through it. I mean, Qualcomm's about the same. So that one was pretty much a wash. Intel 5.13%, and then Citibank 4.53%. Both were significantly higher than the Johnson & Johnson yield of about 2.6% that we were getting. So we were taking that money and putting it to work by adding into something that's yielding over 3% on average. So squeezing a little more income out of those dollars.
Get the freedom, man. Let's go.
Let's go. So you tell us about your last set of purchases here, Mr. Lanny.
One last stock. It's been on my watch list. We featured it on many videos, many blog articles. If you haven't checked the blog, link below in the description. Guys, we're talking a brown truck. 'Tis the season right now. United Parcel Services, ticker symbol UPS, on average bought 3 shares at $180.61 throughout the week. $542 in capital has been invested in Big Brown. Added $18.24 at a yield of about 3.37%. Really liking them, and again, highly recommend looking into them to add to your dividend stock portfolio as well.
So all right, everybody, let's see. I said $3,000 was the benchmark. Let's see, did we get to it? I added $1,418.29 and $50.68 of dividend income. 3.57% yield on purchase. Lanny, let's see what you got here.
First off, congrats, Bert. I mean, anytime you can add $50 in 1 week to your forward income is surely impressive, man. So if you keep that up, guess what? You'll get to freedom in no time.
That's right. So let's see. Did you hit 50 of income on your side?
I did not. We invested a total of $1,527.89. Added $46.24 at a yield of 3.03%.
All right, so in total, everybody, that was $2,946.18. We just missed $3,000 by $53 and change.
For the love of God.
Not Janie Briggs. I mean, if that was the case, we should have each just grabbed 1 more share of Intel, just to knock us over that. But you know what, everybody? Think about this. We still invested $2,946 total, adding $96.92 combined. What's important, whether it's $1, $10, $100, $1,000, etc., you can just keep climbing up there, is that you're putting your money to work and moving it off the sidelines into income producing assets. That's really what it's all about. And that's hopefully you get from this video that we clearly are putting our money where our mouth is. I think we've talked about all of these stocks and stocks to watch, stocks that are on our watch list. We are buying what we're talking about here, and we know that you buy what you talk about on your channels and Twitter as well, and that's what motivates us. That's what it's all about.
And guys, we heard in the comments, we're going to have a lot more videos to feature here, a lot more features as well into our dividend stock videos, so we can't wait to dive into those. Let us know what dividend stocks you guys have been buying in this wild stock market. Do you guys think that inflation is going to cool? What do you think the Fed is going to do in 2023? What stocks are you going to buy during this possible recession or possible no recession? Let us know in the comments below.
If you haven't already, everybody, subscribe to this channel. give this video a big old fashioned thumbs up here, everybody. That's what it's all about.
You're either with us or you're against us. That's Bertha, Hurt, and Lanny from the Dividend Diplomats, over and out.